Hey everyone, it's me, Mills. I wanted to let you know that you should stay tuned for the entire video so you can hear about an exciting giveaway announcement. You don't want to miss out. Dylan, I am so honored to have you part of my YouTube channel. I remember when I was in college, I had listened to you speak in the Young Investors Club at UCF. And honestly, I was just so impressed that someone so close to me in age was so incredibly knowledgeable about investing and the stock market and anything that goes into it. So I'm excited to have you on the channel. I'm excited to hear your insights and share it with everybody that's going to watch this video. But I know you. So why don't let's catch everyone else up to speed, right? Tell us a little bit about yourself, your background, and what you actually do for a living.
Well, thank you for that little lead up. You're very impressive yourself and all the progress you made in your business. I'm very honored to be on. And my name is Dylan Quintilone. I'm an investment advisor with Copper Canyon LLC in Orlando, Florida. And what I do is I help people reach their financial goals and create portfolios to invest in the stock market.
I love that. And for people that are watching this video that don't know what it means to invest, can you tell us a little bit about what that is, what that means?
Yeah, there's two ways to look at this. You can do investing yourself, which is a very valid way of investing. And that would mean you'd open up a discount brokerage accounts and you might go buy ETFs, mutual funds, or stocks within it. And then the second way that you might invest is with a professional where they help guide you through the process and create a tailored investment portfolio to meet your needs and reach your goals.
Okay, so maybe someone's watching this video and they say, yeah, that's great. You know, I know what investing means, but they don't necessarily see the value behind investing. Or maybe this is the first time someone's hearing about investing. Why should someone watching this video invest? And honestly, when?
Yeah, so I think, when you work with a client, you're trying to help them get their budget, get their financials in order. And then the second step is actually building and accumulating that wealth and protecting it. And so that's where investing comes in. And it's trying to build wealth so that you can reach your goals. It's a very important thing to invest within the stock market so that your money can grow over time. It's not immediate. It takes many years of compounding returns to get the portfolio, to your goals or your retirement goals. And that's pretty much why you should invest.
I think you hit the nail on the head at this point. I mean, whenever I sit down with someone, I always tell them, it's important to invest, like you said, because the sooner you start, the more the compound interest has an effect on your overall accounts, portfolios, and also, like you mentioned, it can help you reach your financial goals, right? There's only so much your money can do for you in a normal bank account. So
yeah, absolutely.
right. I mean, did you have something to add? I'm sorry, I didn't mean to cut you off.
No, I apologize for cutting you off. A savings account, it doesn't yield that much as far as a way of a return. It's typically less than 1% for most high yield savings accounts. And, every year there's inflation. So the dollars that you hold in your savings account or your checking account, they're worth less every year. So, one reason that some people invest is to grow their funds so that it meets or beats inflation. So, it's fiat currency, it's paper money, it's always going to be worth less. So you have to do something to beat inflation.
That is definitely such a key component and an interesting perspective that oftentimes people forget about, is inflation. You're right. Just leaving it in your bank account, it'll devalue that money and it won't go as far as it would today, right? So say someone wants to, like you mentioned, there's two main ways that someone can invest. They can do it on their own or they can hire someone to help them. How can they invest? Can you go a little bit more into depth in that topic, and how can they do so properly?
Yeah, so as we mentioned, if you're going to do it on your own, that's the one method I recommend. If you're not extremely knowledgeable in the stock market, is looking into something called passive investing. And, you open your discount brokerage accounts. That can be with any number of companies. One company that we used in the Young Investors Club when we were at UCF was TD Ameritrade.
Mhm.
They have a great discount brokerage service. And within that brokerage accounts, you can actually select exchange traded funds, which are ETFs. They follow an index such as the S&P 500, Dow Jones, or NASDAQ, and you passively invest into that. So you can put your, $50 a week or $100 a week into that index ETF. And over time, it'll compound and it'll grow. And preferably, if you have enough time, you could turn into a large sum of money. And then in the other realm of things, there's working with a professional. If you work with a professional, they'll actually help you create a tailored portfolio for some professionals, such as myself, where we'll combine ETFs, we'll combine individual stocks, and what we'll do is we'll really find what your needs are, as far as investing. Not everyone can have the same portfolio. Some people, they don't want as much risk. They don't want to see their money fluctuate as much. So we have to put different things in that portfolio, maybe bonds if they're a little bit more conservative. So it just depends on the individual, what their risk tolerance is, how long they have until retirement. And I would say that pretty much sums up, there's two paths, I would say.
Dylan, I'm sitting here and I'm just reminiscing on how knowledgeable you are. You bring up TD Ameritrade, which, a
Yeah,
lot of the presentations in the Young Investors Club was with that platform. But you also mentioned a lot of industry level jargon, right? NASDAQ,
yeah,
Dow Jones, S&P, ETFs. You and I know what that information is.
yeah.
But if there's someone watching that this is the first time they've ever heard those terms, they have no idea what that is. And, you mentioned the other path of investing is hiring someone on their behalf. How do they make sure that they choose the right person if they're not knowledgeable in this industry in the first place?
Yeah. So you definitely want to do your research. Not all investment professionals are created alike.
Mhm.
One tool that is available to many people to do research on, professionals are considering is called brokercheck.com. And so if you're considering working with an investment professional, you can go to brokercheck.com and you can input their name, you can input their firm's name, and it'll give you their educational, it'll give you the whole history of that person. It also discloses if there's any conflicts of interest working with that professional. That's one tool that I recommend people, if they don't, they just met somebody and, they did a pitch about invest with me, always go to brokercheck.com, ensure that that person is licensed and registered to conduct business in the financial services industry. And there's some other tools as well. You definitely want to Google search the person. You want to see if they have any reviews. Preferably if they have 5-star reviews, that means they've worked with other individuals such as yourself. If you're looking into this professional, just do your due diligence. You want to be careful because some people give a lot of money in their portfolio to an investment professional. You want to make sure that you can trust that person. Your money's safe.
I'm glad you mentioned brokercheck.com and, just typical good old Google, right?
Yeah,
And I think it is important because just because someone says that they can help you with with your investments really doesn't
yeah,
necessarily mean that they are qualified to do so. Um,
exactly. Yeah,
and I think earlier on, you talked about ETFs and other industry level jargon, but one of the other things that you mentioned that I wanted to dive deeper on was fiduciary and broker dealer. Those were some other two key terms that you
yeah.
talked about. What's the difference between a fiduciary and a broker dealer, and why should someone work with one over the other?
Yeah, so as I said earlier, not all professionals are created alike.
Mhm.
I'm a fiduciary, so we'll start there. A fiduciary is the highest legal and ethical standard under law as
Mhm.
far as how the investment professional needs to advise the client. So I'm required by law and ethically to provide advice to the client that is always in their best interests. So I'm also fee based. So what that means is I charge a flat fee based on the value of the portfolio. And when I give advice from a fiduciary perspective, I have to make sure the advice aligns with the client's needs and goals. I can't do anything for that client that could go against what their best interests are. Whereas a broker dealer, they buy and sell securities to clients. You know, the broker dealers could be like a Morgan Stanley, or they could be a Raymond James. They're your Series 7 and 66. And what they do is they're held to the suitability standard, where as long as an investment is suitable for that client, they can go ahead and sell that product to that client. They always work in the best interests of their firm, not necessarily always the clients. You know, one thing I'd like to mention is, you know, Congress, they're trying to pass some acts to make everybody a fiduciary, because Congress recognizes that when the advisor's, you know, fiduciary principle is aligned with the clients, it creates a better relationship. It creates more trust, because if you don't have to worry about your advisor giving you advice that's against your best interests, it's overall better for the investment industry and the investment field.
I'm glad you talked about that, because I think without hearing it from someone in the industry, someone watching this video might not realize that there is a difference, and they might get sucked into, you know, an investment plan that might not necessarily align with their overall financial goals. And another thing that you mentioned was that the fact that you charge a fee. You know, I've heard of some other people that charge a commission versus a flat fee. What's the difference between the two, and which one is better in your opinion?
So in my opinion, you know, fee-based is the better routes as far as choosing an advisor, because when you do better, the advisor does better. When, if your portfolio doesn't do better, the advisor doesn't do better. Your interests are aligned. So a flat fee, it's typically based on a percentage of the portfolio. The perfect example I give is, if you give an advisor $1 to invest, if they charge 1%, at the end of the year, they'll have charged the client 1 penny out of $1. And as far as a commission is concerned, that's typically broker dealers, and it's one-time transaction where they charge anywhere from 2 to 6.5% of the value of the investments, which is pretty high, you know, specifically for some mutual funds where there's load fees and other fees associated with owning them. That's the way the industry was over the past 20, 30 years. And I would say that everything is really making a shift towards fee-based. It's because, like I said, the interests have become aligned with the clients. You know, so when the clients do better, you want the advisor to do better. You don't want the advisor always thinking about making you buy or sell so they can earn more commission. You want them to genuinely give advice that's in your best interest.
So speaking of best interest, you know, you talked about mutual funds and the fees that go on that. Before, you know, I studied finance and met people like you, and, you know, had those inner circles, I had no idea what a mutual fund was. And I actually had no idea what an ETF was. So you mentioned both in the video so far. Can you explain the difference between the two of them, and how much one could save you over the other, depending on which one's better?
Yeah. So an ETF, exchange traded fund, they can follow any number of indexes or strategies. So the perfect example I always give people, because I follow it on a daily basis, is the SPY, the SPY ETF. It follows the S&P 500 index. And if you divide it by 100, that's typically what the value of the SPY is compared to the S&P 500 index. And what I would like to say about the SPY is the expense ratio is really low. You know, when we talk about expense ratios, that's how much you pay out of the funds you invest into the fund to the person who creates the ETF. It's less than 10 basis points, or, you know, 0.1%. Whereas some mutual funds that follow the S&P 500, they have much higher expense ratios. They have load fees to purchase and sell the investments. Whereas a ETF trades more like a stock. A mutual fund is a little bit different mechanism as far as buying and selling into the market. It has to be redeemed at the end of trading, depending on what type of mutual fund it is. You know, there's open and closed-end mutual funds. I always recommend people steer towards ETFs. They're simpler investment vehicles. The expenses are lower, whereas mutual funds, typically the expense ratios are higher. And over the life of investment, you know, when you're talking about 0.5% or 1% savings in fees, it can mean tens of thousands of dollars depending on how many compounding periods you have over the life of the investments.
Okay. I'm glad that we've had this conversation because I guarantee that there's someone watching this video right now thinking, oh my goodness, this is not for me. I cannot invest on my own.
Yeah.
If they wanted to talk to you about potentially hiring you, or maybe get a little bit more information before they decide if they wanted to try to invest on their own or not, how can they contact you? What's the best methods of
Yeah.
communication?
Well, of course, you can call me directly. I think my contact information is posted readily on the web. But go ahead and visit my websites. We have complimentary consultations. So if you want to learn a little bit more about investing, if you want to learn about maybe how to save for retirement so that you can build your nest egg up and you don't have to work in your golden years, go ahead and visit and book a consultation on our websites. And like I said, it's complimentary, so there's no risk, no obligation. If you don't like the advice we give you, you're free to do with our advice whatever you want.
I love that. And I'm definitely going to make sure I let everybody know that you are offering complimentary, consultations, because I think this is a scary topic for a lot of people, but by you coming and talking about these main topics, I think you've made it a little less scary for everyone watching this video. So thank you so much for sharing your expertise, sharing your knowledge, being so approachable in this this topic, because oftentimes I feel like financial advisors or fiduciaries or investors, whatever the title may be, can sometimes be a little bit intimidating. And I think you are a very approachable person. So thank you for being so open and willing. And I hope that you have a wonderful day. And I look forward to many videos with you.
Thank you. I appreciate you having me on. It was a pleasure.
Thank you for watching the full video. To enter the giveaway, all you have to do is subscribe to my YouTube channel and follow me on Instagram. That's it. 2 clicks of a button and you are automatically entered into the giveaway. So what are you waiting for? Go ahead, subscribe and follow and get entered.